Hello, everyone. Welcome to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to talk about the BoE. We're going to talk about the Great Britain Pound, and we're also going to do probably a little bit of live trading. It looks like we've got a trade coming our way that I've been sort of stalking here for about the last hour or so. So we're going to go get right out to price action here in just a second. Good to see everybody back in the room. Tuku, good to see you. Bobby Bob was here earlier. Good to see Bobby. This was an absolute crazy day for WTI crude oil. Let's just get right out to price action. I'm sort of looking at 42 buys here, 70.42. That's going to be my first range number. We really haven't done anything today in WTI crude, but what I really want to point out is you see these two indicators down here. Those are volume counters. And the problem with volume counters, when you see the volume distribution like this, it means that there's chaos in the markets. There's an absolute lot of players that are coming in and out of the market, and they are doing it. That's what I would call a sweep. Now, you've got to be aware of sweeps, especially if you're trading commodities, commodity futures contracts. The sweeps can drive price really anywhere. So we're going to take a bit of a risk here, and it looks like we're going to get an opportunity to do this live. I'm looking at 70.42s as being a potentially buy. Now, remember, I like to shade my entry, so I'm going to go at 70.45. We're going to go ahead. We're going to buy 3 WTI crudes, March 2025, and we're just going to execute this trade live and see how it goes. It's been a pretty darn good trading day for me personally. We put up a pretty big number today, so we're going to take a little bit more risk as the day pulls on here, see if we can't have an amazing day. But it's just been absolute chaos. This has been as difficult to trading conditions as I've seen since Arab Spring back in 2011. We've really had, what we could say COVID, but everybody pretty much knew what to do during COVID. Sell it and walk away from it. It wasn't hard, and then buy the stocks on a discount. But I have to tell you that the constant announcements out of the White House, the executive orders. Today, I'm going to show you a huge story that cost us our gold trade, our first loser of the year. We posted earlier today. We got to go over that. We lean into the losers. But right now, I'm looking very, very closely. I'm at this 42 buy, and that would be my range number, one of my range numbers here. So I'm looking at that. I think that 70-50 area. We've already seen bidders really dig in at 56 and send WTI futures a little bit higher. But for me, right now, I'm going to be patient. We're going to wait and see if we get a late day shot at that 45 area. I would love to see 50 get taken out and then we get a shot. But I have to tell you, this has been just craziness. You can see right here, this kind of stuff right here. This is a 1-minute chart, guys. This kind of stuff right here where you just see an explosion, a 3-minute explosion where the volumes just absolutely take off and spike. That's what we call an occupational hazard. Now, a lot of folks love to be in the market. I'm really not one of them. I like to get in and get out. So if, in fact, we do get elected, I'm going to be looking for probably 5 to 10 pips or 5 to 10 ticks. If they give it to me fast, I'm going to go ahead and take it. And if it starts to bleed against me, I'm not going to sit more than a couple minutes because I don't want to be around in a big volume spike. And we're already seeing the trade move a little bit higher up to 70, 75. I absolutely love that. This is the setup that I want to see. So from my view, I have a lot of confidence in my range numbers. If we get a shot to buy 70.45s live on live stream, we will certainly do it. And remember, the DOMs, the trading DOMs that we use on TradingView, those are demo dollars. This is real money. This is my account that I'm trading with the white DOM. You can notice that it's a different platform. I use TradingView for my analytics. I use the trading DOM for my broker as my order entry platform. You can do the same thing with MT5 and TradingView if you're more comfortable using TradingView for your analytics. I've been using it for so darn long. So good to see everybody back. Team Marina, good to see you. Bobby Bob, always a pleasure. Dragon, Tuku, yeah. We're in some pretty good stuff here today. It's been a crazy day, an absolute crazy day, but we always got to start with the bad news. I don't run from losers. Some of the worst things I've ever done is ignore my losing trades because when you lose, you're paying for information. You've got to be aware that, hey, maybe, just maybe, I can glean something off a loser. And I got to tell you, this was not a good one. This frustrated me to no end. This loser did. Here was this. I put this one out earlier today. I really liked my 38% retracement, my buy right around that 28, 42.50 area, 42.75 area. The trade we got entered, so we went live. The problem was we got caught up right in all that talk about fresh Iran sanctions, and the markets absolutely went crazy. Crude oil went crazy, gold went crazy, everything went crazy. And what we ended up having out of gold was a strike and about $1.25 rally. We were looking for about a $4.50 rally there, so we didn't really get it. And it took only about 5 seconds for us to get that initial pop, and after that, we just got swept out. Typically, when we get swept out of a trade, it means the market's going much lower. First loser of the year, so I really don't like losing. But you can see right in here, that was where we wanted to go long. You'll notice now where we trade in 28.52. I mean, it's really frustrating because we're trading $10 higher from really where our entry point was. But we've got to be smart about what we're doing with our risk. Today was probably a day to take a loss as opposed to stick in there and see if you can make a lot of money. And the reason why is it's been so chaotic. It's been absolutely so chaotic. So when I'm looking at this gold market, the first thing I want to do is I say, okay, what happened to our trade? Well, here's our 1 minute chart. And this really isn't going to show us much. It's not going to show us much because really our action happened about 5 or 10 seconds. We got a nice, I would say, well, I wouldn't say it just was a nice bounce right off our entry. And, you know, your high right here, or excuse me, we had a nice spike off our entry that went up about $1.25, which is about 125 pips. It's not good enough, though. We get swept out. We come back down to our level, and you'll notice that you do get an opportunity. Typically, you get an opportunity to get out at break even, and that's one of those that would have been great to be able to do that, but we can't see the future. When we do, in fact, take a big draw and then the market bounces back in our favor, right back to our entry point, the tendency is to stay in the trade because maybe the worst is over. I took a massive loss yesterday. Well, not a massive loss, but I took a big one yesterday on gold futures, doing something real similar to this. And believe it or not, I've made it all back and then some over the past 24 hours. But I do not like taking big losses. And it's one of the things that even as a veteran trader, these markets move so fast. And right now, we're seeing such chaos that we're not getting what I would call true price action. It's choppy, it's wonky, it's crazy. And when you get crazy price action, typically you get crazy P&Ls and crazy results. You either make a fortune or you lose a fortune, or, you know, maybe you just move sideways, which can be just as frustrating. So I'm watching this gold market closely. As far as what should we be looking to do here, are we interested in really doing anything with gold right now? I'm skeptical. I think that the big action's over. You'll see the 30-minute chart right there. There was your big volume, went down. Look at that, sort of a hammer formation. Took out our 38%, and now we're on the rally. I would be looking bullish. I really would be looking bullish, but I can't really tell you what's going to happen because it seems like every 30 minutes or an hour we get a fresh announcement out of the White House. Wouldn't shock me if we get one right here. But that's just a risk that we have to take. We're traders, and in order for us to trade, we've got to just trust. We've got to trust our fundamentals. We've got to trust our technicals, and then we've got to watch our risk. So right now, I mean, I've got this trade on a relatively short leash. We're not live yet. We're printing about 70, 75 in WTI crude. I want to see that pull back down to about 45. The trade for this half hour is setting up beautifully. We're looking at a range oscillator of about 40, which means I expect the 30-minute bar to be about 40 pips long or 40 ticks long. And right now, if we do trade down from this area and get a shot at our level, we've got a high probability of getting at least 5 to 10 ticks. I don't know. We may let it ride if we get in, or maybe we'll try to. Maybe we'll shoot for a few or $500 or $600 here. We just got to wait and see how it pans out. But right now, still in the game. This frustrates me, though. This was a situation where the faster you cut bait, I mean, if you were in it and it bounced up 125 pips in your direction and you just said, well, I'm going to let it ride, I don't blame you. I don't blame you. But golly, I mean, it's tough to take a loss on something like this, especially when it's news-induced and it's just panic trading. Is all it was panic trading. Hey, Brian Barbie, good to see you. So that's a good look at gold. Now, as far as what can we do right now, I mean, I can sit here and draw up, we can draw up levels until the cows come home. We know a couple of things. We know the safest trade on the board, at least I do, and it's going to be a scalp right in front of 2,900. Expect that trade idea probably to be out tomorrow, maybe before NFP, maybe after NFP, but we're going to have that on the board, not 29, but 3,000 right up here. That's going to be the safest sell price. So we're looking at 29.75s, selling that, and that's a bigger trade. But I think that there's an awful lot of potential up there and something that we can do. And I'll update all the performance metrics and everything probably for tomorrow's stream. But this is an interesting market. I mean, it's definitely bullish. What can you really say, though? I mean, we tried to buy it. Look at the 4-hour chart. It's just ugly. It's just really ugly. I mean, there's your bull run. You can see what we've been doing all week. There's a bull run, compression, break, and then we break, compression, break, and we were in perfect position to buy that pullback. It just didn't work. There was too much action in there. Your news-induced panic, but look at where you went. Right on the 4-hour, you went right to 62%, which is at 28.36, and since then you've bounced $16. So frustrated, PO'd. I got a bunch of other words to give you my mood on that trade. I'm not happy at all with it, but it is an occupational hazard. That's all I can say, is sometimes you get swept out of the box you get right back up on the horse and go after it. So that was our trade follow-up. I always want to make sure that we're current and we do the best we can with the trades that we executed and put ourselves in a position to win, not necessarily just break even. In any case, if you need a place to trade, if you're interested in trading gold, switch markets is great. If you're an international client, if you're here in the United States, we have a recommended broker, Owanda, and they've been a recommended broker for a long time now, about 3 years, about since I've been here. So switch in Owanda, our partner broker is Switch Markets. So there's absolutely, I'm not sure that anybody beats them with their deposit bonus offers and as far as what they can do for you with just getting you involved in drawings, bonuses. There's all sorts of stuff. So if you're interested in trading, Switch is a good one. All right, week 5, 2025. Monday was sort of slow. ISM, global PMIs. I didn't really care for trading Monday's session, so I really didn't do it. Tuesday, JOLTS job openings. Interesting. That was our first set of jobs numbers for the week. Wednesday, we got the ADP employment numbers and the EIA crude oil report. And then Thursday, we got the BoE interest rate decision, and that's today. And that's going to be our fundamental of the day and what we're going to cover here. Tomorrow's NFP Live. Don't miss it. I'll be in the saddle about 10 minutes before the number, 6:20 a.m. My time, Mountain Time. And if you're on the East Coast here in the United States, 8:20 a.m. Eastern. And other than that, check your local listings. If you're in the How to Trade trading room, just check out our streaming schedule. It'll be lined up per your time zone, and you'll have a chance to get in on the action. We'll have live trades, analysis, all of it. In any case, for today, the news of the day was the BoE, and the BoE spoke, and they were loud and clear. We had an MPC vote cut. The idea was what? We were gonna cut the interest rates, and that's exactly what happened. We saw the BoE step up and cut by 25 basis points, brought it right down to that 4.5%. And for me, the key here is that it was unanimous. I mean, pretty much everybody voted for the vote cut, and I think that's basically one better than we figured. So I would call that decision unanimous. I think that's a pretty darn good indication that we've entered that dovish cycle. As far as the news of the day here in the United States, you can see we've got a bunch of jobs numbers, and all that's fine and dandy. But let's go ahead and take a look at the Great Britain pound first. There's a couple of pairs that we do want to look at here. This is interesting. This is a fantastic resistance zone right here. Nice big monthly range. I love those. We're looking at 126.09. So that 126 area is fantastic resistance. That would be where the big sells are more than likely going to come into the market at. And you'll also notice that we've got a moving average up there at 26.63, and also Bollinger Band midpoint up there at 126.54. This is an interesting type of a trade. If you're interested in selling, I would definitely be waiting for 126. It's only 150 pips higher. We could easily see that tomorrow during NFP. So I'm optimistic that we get a shot at that trade. As far as the shorter time frames go, if you're interested in trading intraday time frames, which has been an absolute challenge this week, no two ways about it. You'll notice right here, here's your 4-hour chart. Right in here is where you see your volume spikes, and there's going to be your BoE getting involved and pretty much saying that they're going to be more dovish than hawkish. That only leaves the U.S. Federal Reserve to be really the lone hawks in the world. Everybody else is cutting interest rates except for the Fed. Going to be an interesting spring. We could see some trends develop. But right here, as far as what do I want to do now? Do I want to be long or short? I more than likely would want to be short this product. I would wait. Personally, I think a safer trade's up there at 126, somewhere in there. And you definitely have a chance maybe to get involved on a big NFP run-up. If not, you got a 62% right there at 124.477. So maybe 124.75s. It's a higher risk trade, but I don't really feel bad about recommending that area as being significant, because what do we have? We have sort of a hawkish U.S. dollar. We got the DXY trading right around 107.75. We're about flat today. We took major heat on the U.S. dollar earlier, but now we're back to flat, and I would expect the dollar to sort of move higher against the Great Britain pound. So what we're looking for is price to get out of whack. We're looking for a reason to be in the markets. Similar with our crude oil trade. We want to see price do something. Right now we're trading 70.80. I want to see it run. I want to see it go to 45. Give me a shot at the bottom of this thing. That's what I want. And if the market doesn't move, what happens is we get chopped to death. The buyers get stopped out. The sellers get stopped out. Everybody's trying to take a position, and it doesn't work. So right now you can step up and say, okay, Shane, I want to sell it. I'd say, okay, God bless you. Good luck. Maybe it goes lower. Maybe it doesn't. I really don't know. I don't have any anchor. For me, this 62% is going to be a great anchor. If I wanted to sell right now at 124.39, something like that, I'd be stopping myself out up there at 59, and that's where we would look to make our trade. We'd look to go short. We'd look to get rotation down, but just stop myself out if, in fact, we broke above the 50% retracement. I'm not really into that. I don't think that's the best idea. I want to wait. I want to see something happen. Then I want to react. Then I want to make the money. That's it. Let me see. Jarvis Price, can you trade gold on Owanda? You know, I believe that you're going to have to do something. You're going to have to check into it. I've heard of traders going down that road. Personally, I trade gold futures, but you could definitely be looking for gold spot or gold. I believe that the gold spot market in the United States, your requirements are going to be much higher. Your margin requirements are going to be much higher. So you're going to have to look into that. To be honest with you, I don't know off the top of my head. I do believe you can, but I believe the margins are a lot bigger than they are in some of the other firms that aren't located here in the United States. There's a lot of the margin requirements that you have to satisfy per your jurisdiction. Unfortunately, the United States has some real high ones when it comes to commodities. For instance, I mean, my margin trade on this WTI crude oil, I got 3 lots down. My initial margin is about $3,000. So I got to have at least 3,000 to even place the trade, and then we're playing for $30 a tick. So you just got to look into it, Jarvis. That's the best answer I can give you. Just go to Owanda's website, ask their representatives, and they'll be able to tell you exactly how you can trade gold through them, or if you can't. My guess is they probably have a gold option, though I believe they do have a commodity suite. Moses, good to see you, Moses. Welcome. So right here, that's a Great Britain pound USD. That's how I would approach it. The other one that we want to look at is the yen, because the yen's actually surging just a little bit. And what do you have here? You've got a big surge. You've got a big surge and a big trend in the guppy. So if I'm looking to trade this right now, I want a range that's going to give me a chance to short this thing. And the reason why is we are trending hard. You'll notice price is outside of my lower Bollinger Band. That means life is getting tough for the bidders. And so right in here, there you go. There's your Fibonacci retracement 4-hour chart, 189.14. You'll see this bounce back right here. I already gave you the trade, 189.10, and now you're back down to 188.72. Pretty darn good scalp if you're interested in trading the 4-hour chart, which I would recommend if you're trading Forex pairs. But really an interesting zone and more along the lines of just an incredible correction that we're seeing in the guppy. Let's step back and see if we can get a macro level and potentially make a sizable trade and have an actual chance to maybe rack a few hundred pips up. Well, for our monthly chart, it's what we call chaos or chaotic or sort of choppy. You can see this monthly chart is horrible. We talked about this hammer all those months ago. If you were here, we talked about this hammer being potentially a reversal signal. It still is, but you can see that bullish optimism has really faded. So now we've got the Great Britain pound. We got the Bank of England cutting rates. We've got the Japanese yen, the Bank of Japan raising rates. We've got an interesting dynamic where this pair is likely to seek a new level. Now, as far as a monthly chart, I got nothing for you. This right here, Fibonacci-wise, is not a good sequence to be attacking with retracement levels. Spike low there, spike high. You'll notice that you just don't get much. You don't get much of a range over the past 6 months. And also, if this thing breaks, more than likely it's going to run right at that liquidity zone on your monthly. So if I was watching very closely, I'd say, okay, what levels do I need to know? You need to know that level right there. August's low, last August's low. You definitely are going to want to have your eyes on that, and that's 180.20. We'll look to step up and buy in front of that, but that is way down there. And the other thing you need to remember is that's right around January's low. So last year's low is right here with January's low, and then this spike low was a beautiful run at the yearly low, and then a great bounce. So I would look for this area down here to set up as support. Now, nobody really cares because that's way down there. It really is. I mean, there's no two ways about it. 188.77, that's way down the queue, about 800 ticks. So what would I be looking to do right now? Well, let's dial it down to a weekly chart and see if we can get a potential opportunity here, maybe to sell a retracement. We don't have anything there either. You'll notice very, very compressed inside week and then a break, a bearish break. Let's go to a daily. Do we have anything to do on the daily? It's not great. It's not great. Spike high right there. Nice doji formation. Pretty darn good. Pretty interesting candle at least. You've got a doji right around your 13-day EMA. That tells us a lot of indecision right there in the midpoint. And then you get the sell-off. Okay, well, there's a big 2-day sell-off. Of course, we would have loved to got in on that. Something like this. Spike high. Spike low. 190.12. It's probably a great sell. The biggest challenge we're going to have is getting sort of a swing low to set up here. Now, I talk about spikes a lot when I do Fibonacci retracements, and that right there is a vintage spike high. That's where the second candle is higher than the first and higher than the third. It's a 3-candle pattern. You'll say, Shane, this spike hasn't set up yet. No, it hasn't. So if you want to wait, you can wait. If you want to go right now, you could go right now. And the way that you would do that is you just run that from that spike high right to your lower extreme. And if you get that lower extreme sort of set, then you can step up and sell that 38%, and you can do it with confidence. Personally, I wouldn't wait. I want to join this bearish pressure, and if we were fortunate enough to get a bounce in the guppy up to like 190, maybe even 189, 75, maybe 189, 89, I'd be taking the shot there. Take the shot because you want to go with pressure. And the problem with a lot of this stuff, especially all of your technical tools, is they lag. And if you wait too long, you're going to miss it. So right there, you could do that. And then the other thing you could do is you just go right down to that 4-hour chart, like I told you. And this right here, this would be a case where we have a defined spike high. There's your spike candle, and there's your spike low. Remember, those are also called swing highs and swing lows. A lot of folks call them liquidity sweeps. I don't care what you call them. I really don't. I get tired of arguing about what things should be called. I just want to trade, man. They pay me to trade. That's what I need to be doing. So if you're not clear about what I'm saying, it's okay. Send me a private message over at How to Trade. I will do my best. I will do my best to get back to you in short order. Okay, so you can see right there, we want to join the trend. We don't want to be left out of it. That's how you would do it with this Great Britain pound Japanese yen. All right, let's get back at the price action. You can see we're starting to come into view here with our WTI trade. Let's get our chart over there. You'll notice we're starting to open up here on the 1-minute chart. Volume still relatively light. My guess is we're not going to get it now. We're probably going to get it in the next hour, but I do believe we're going to get it. And you say, Shane, if you know which way the market's going to go, why don't you sell it right now? I'm not interested in that. Let's say somebody comes out and says something and the market reverses against us like we saw in gold today. That could be ugly. In any case, you can see our orders are resting. I really would like to get that execution, though. I think that would be a fantastic trade. Potentially one, maybe 2 trades left in the day. I would really like that one for WTI crude, though. I think it could be a good one. We're just a ways off the pace. We're still about, 25 points off? A lot of folks laugh at being in position that early. I don't. 25 points can happen in a flash, an absolute flash. And today, I want to put that one on the board. So I'll be sitting here probably for the next hour or so watching this trade develop and see if we can get a few bucks off of it. All right, let's see. Today, we also had a slew of economic numbers that face the U.S. dollar and the United States economy. People get carried away. I listened to the announcers this morning, the folks on CNBC, just go on and on and on and on and on about, the challenger job cuts and initial jobless claims. Nobody cares. Guys, nobody cares. We're all waiting for NFP tomorrow. That's what we want to see. We want to see the state of non-farm payrolls. I'm predicting it's going to be potentially, you're going to see a downtick. We won't see the first real bad one until next month. So I think things are going to be relatively stable, but you're going to see an incredible decrease in federal workers that are leaving the workforce. You already saw the buyout news in the United States. You saw a lot of these folks are being forced into retirement or they're being just outright terminated with the new administration. What we're seeing is what we will see, and I'll bet on it. I'll almost guarantee it. You're going to see non-farm payrolls get a lot worse before they get better. Now, I expect them to be relatively strong by July, by August. You're going to see an uptick in hiring, and that's going to be a product of tax cuts. It's going to be a product more along the lines of the immigration situation. A lot of folks that weren't documented here in the United States are going to be out of the country, and those jobs will be filled one way or another, and you can definitely see an uptick in your employment there. So this is going to be dicey tomorrow, but that's what everybody cares about. As far as your initial jobless claims this week, came in at 219,000 over 214 expected. That's nothing. 5,000 jobs. That's not a big deal at all. I'm not too panicked about that. 4-week average is up slightly, 4,000. That's not going to move the needle at all. As far as challenger job cuts go, you can see there's a lot going on there. That's an academic metric. You don't need to worry about things like the challenger job cuts, but you probably should be thinking about US NFP tomorrow, and I'll be back. We'll unpack all that stuff for you tomorrow with our expectations, whether we think it's going to be low or going to be high. I think it's going to be what we would call in line with expectations. I think it's going to be in policy, and it's going to hit the numbers that we've expected. Something to think about there if you are going to trade tomorrow. Remember, 8:30 a.m. Eastern, the market will go absolutely crazy with the volume and the volatility. As soon as that NFP drops, it's a big deal. It's not a little deal. It's a big deal. So I want to see everybody ready for it tune in 10 minutes before, and we'll be ready to rock and roll with our analytics, and we'll also trade it live. All right, as far as the Australian dollar, US dollar goes, this is one of my favorites. It really is very similar to the British pound trade, but I like this one. I really do. It's up there at about 64-ish. That's a great sell. And you'll notice that all of a sudden we've got trending markets on the Forex. Trends are easy to trade. You don't have to worry about, your support and resistance levels too much. You just basically look at price action. You say, okay, where are we and what should I be looking to do? I'd say, well, you've got a 38% right up there, right around a big round number, 64. Got to take a look at it. So I'm watching that one pretty closely. As far as other levels that we could be looking into, we had a spike low that came across the board, and that was going to be, I believe it was going to be 2022's low. You'll see we've got some compression, and now we're rotating back inside of this range. I think we're going to see some nice trading, maybe 3 or 4 different trades in between this type of a range. So in any case, WTI starting to trade down towards the bottom of the range. We'll click over to there if, in fact, we start pushing daily lows. How about Bitcoin? Bitcoin's really been the story. A lot of folks are awfully concerned about Bitcoin pulling back now to about 96,000. And I think that the biggest thing you can do is not get carried away. Don't get carried away with it. Remember, Kiwi Swissy. Okay, I'll check the Kiwi Swissy out. I remember yesterday I forgot about your Euro USD request, so I'll be sure to do that. Bitcoin, definitely still bullish, no question about it. 86, 87. Maybe we get it. Maybe we get it tomorrow on NFP. Maybe we get it this weekend. I would like that. I would like that a lot. So I'm still watching that 38% as a potential launch zone. I would rather do something like this on the cash market so we don't necessarily have to stop ourselves out like the derivatives. I think you just buy that retracement level and just let it roll. I would be very surprised if we're done trading 100,000. 100,000 seems like it's a heavy two-way. It's a two-way area. There's no question about it. We've been debating 100,000 for 3 months now. There's a ton of action there. There's a lot of folks that have been trading that zone. And we just have to be ready for maybe, is that the top? Maybe that the top of Bitcoin? I don't think so, not by a long shot. Institutional adoption's there. Everybody's a cheerleader for Bitcoin, including this administration. So we're still looking at about 86. I'd be bidding probably 88s on the cash market. Now, if you're trading derivatives, you're going to have to do this much tighter. It's going to have to be 86, 775 or something. Just watch your exposure, 1 to 3% on any given trade, and you'll have a chance maybe to succeed there. So definitely something to think about there if you're trading Bitcoin. We're still, it's pullback season. We're still looking hunting pullbacks. Okay, let's see. Kiwi Swissy. This would be a good one to end on here. All right, Kiwi Swissy 4 hour. You can see we've sort of got a 4 hour break. Big time break there, and then a rebound, and now we're sort of filling in. So if you're an order block trader or a smart money concept, you'd be looking at that area right there as a potential liquidity sweep. You'll see that we topped out right around 51.58. So 51.50 is big. The sellers came in big, and they came in real big on the last day of January. And then on Sunday's open, you saw the gap down. But remember, these voids are always filled. We've filled it up, and now we're ticking higher. So let's go ahead and see if we can find some way to trade this thing. I don't really see this as a trending market. It's definitely down. You're definitely down. There's no question about that. We're definitely down. Do you want to buy or sell? For me, you probably have a chance maybe to bid down here, somewhere way down in here. As far as our monthly goes, spike low on the monthly. Now we're just sort of rotating back up into this zone. This is a really hard one. This is a really hard one because the market's flat. So what we want to avoid is we don't want to get chopped up. Meaning we don't want to get chopped up in a flat market. Like if we're short right now, you're probably right, but we just don't know how high this thing's going to rally. So what I would be looking to do is be very conservative with my entries. I would want this thing to prove it. I want this market to prove itself. I want it to move. This area of disequilibrium has sort of developed here. The monthly range in January was tight. The monthly range thus far is tight. And what we're seeing is something really move sideways. So you have a couple options here. You could still sell. I really don't have a problem with that. You'd be looking at like 51.67. That would be your sell. But I'm only looking for like 25 pips there. That's not a bad trade. It's just a really tight one. Now, if you're serious about maybe taking a little bit more risk or a little bit bigger trade, you're going to have to do something like this. You're going to have to wait for this thing to break. Maybe an RBNZ announcement, maybe a Bank of Switzerland announcement, Swiss National Bank announcement, and then you get that rally right up there to that 13-period EMA, which is at 52.61. You've got 52.50, which is 62% retracement. That would be my happy zone. That's what I would be looking to do. That's where I would be getting involved there with my short trade. All right, everybody, I'm going to go ahead and sign off. Unfortunately, we didn't quite get our trade. We are right there. You'll notice WTI is trading the daily lows. This next 30 minutes ought to be relatively slow. I'm not anticipating a whole heck of a lot happening here. As far as what we've seen today, Chop City. Absolute Chop City. This right in here was ugly. Big time dump beneath yesterday's low. Then we retraced on the announcements, the tariff announcements, and then we've rotated in. We had a Fibonacci level right up here, a weekly Fibonacci. That's sort of held as our session, like our late day session high. And since then, we've sort of been coming off a little bit from 71.44 to about 70.61, but it's very ugly. This is not easy. This is not easy stuff. So what we're looking at there on our let's see, right there on our ADR, somewhere right around 40. So this could potentially trade down into the 20s. I would much rather be buying 69.80s down there, but we'll see what happens right here at 70.5 if in fact we get washed out. All right, everybody, I'm going to go ahead and sign off for now. I'll get your requests for tomorrow, Moses. I appreciate it. If you have anything else that you guys would like to ask, just swing by How to Trade if you want me to look at a market. Send me a private message, and I'll send you back some of my analysis, and we'll look at the Euro USD tomorrow. Still sort of in no man's land. NFP is the big thing, so come back in for NFP live. Unfortunately, it doesn't look like we're going to get our trade while we're on stream here. In any case, you know where I'm at. You know what I'm going to be doing later today. So we'll see if we get any money out of this trade or not. All right, guys, that's a wrap for today. Fantastic trading day, but really hard. If you lost today, don't worry. Tomorrow's going to be a little bit cleaner. I don't see how it could be any dirtier. All right, everybody, have a fantastic trading session. Trade the action well, and we'll talk soon. See you.